Hi, my name's Carly. I'm Head of International at Clifton Private Finance. I'm a senior mortgage broker here. Today, I'm going to answer 10 commonly asked questions around second charge lending. A second charge mortgage is an additional loan secured against your property. This is a separate charge aside from your existing mortgage. The existing mortgage is known as the first charge. The second charge is an additional loan that you may take out for whatever personal reason you decide. You would take a second charge in the scenario of perhaps wanting to complete some renovation works to your property, maybe release some equity to buy another investment property, or potentially even for a wedding. There are some second charge providers that will even lend to you for business or tax bills. Lots of clients will consider a second charge as an option to protect their existing interest rate. For example, you could have secured a very low 5-year fixed deal on your property and you want to protect that low deal. A second charge would be an additional loan against your property for a different time frame. This then protects the existing interest rate and keeps it completely separate. The risks that could be associated with taking a second charge mortgage could be in relation to the product term of the second charge. For example, you may have a crossover of expiry dates on your products. This could become a problem because you may end up paying an early repayment charge on either your existing mortgage or the second charge at some point. It would be our job as experienced advisors to try and tie these dates in together for you or select the right product so you can try and avoid any early repayment charges. You can apply for a second charge mortgage if you have had some adverse credit in the past. We would need to review a full copy of your credit file to ascertain the type of bad credit that you have. However, in this instance, you would be looking at a higher interest rate on your second charge product. Typically, when obtaining a second charge mortgage, the process can take anything from 3 to 6 weeks depending on the complexity of your case. The additional funds will be paid directly to you upon completion. We have known cases to complete in as little as 3 weeks previously. When taking a second charge mortgage, the minimum loan amount is usually required to be £10,000. This can change depending on the lender's criteria. Sometimes they will put a minimum loan amount of £25,000 into place. Second charge mortgages can usually be taken up to 90% of the property value. This is based on a residential property for your own use. You can also obtain a second charge mortgage on a buy-to-let property that you may own, and you can usually borrow up to 80% loan to value in this scenario. It's always worth having a conversation as there may be options available to you that you did not know. On a residential second charge product, the affordability would be assessed on your personal income. If you're an employed applicant, this would be your most recent 3 months pay slips. If you're a self-employed applicant, we would need at least 2 years full accounts or tax returns. It's important to note with a second charge, the loan to value bandings are based on including your existing mortgage commitment. So the 80% loan to value for a buy-to-let would include any existing buy-to-let mortgage and the second charge. This is also the same for a residential mortgage. It would be up to 90% including your existing first charge. The fees associated with a second charge mortgage can vary widely. To give a very brief overview, you would be looking at an application fee and a product fee. However, there are some lenders available that will not charge these fees. It's assessed on a case-by-case basis. Interest rates for a second charge loan can vary depending on your personal situation and what you will be using the second charge funds for. Lots of second charge providers will lend to you for business purposes and for tax bills. This can sometimes attract a higher interest rate. When taking a second charge mortgage, we have a variety of products available with different fixed periods and different penalties. One of the main benefits of taking a second charge product is that you would avoid any early repayment charges on your existing product. You can pay off a second charge early if you wish, providing you take a product at the outset that has no early exit penalties. This can be discussed at the point of application. There are products with penalties. Again, this can be discussed at application. They are usually fixed products that carry a penalty. If you decide to move house whilst you have a second charge mortgage product in place, it's advisable to sit down with an experienced broker. You would need to consider your first charge and your second charge and any early exit penalties attracted to both products. Thank you for watching our video today all about second charges. If you feel a second charge would be a good option for you, please get in contact with one of the experienced team at Clifton Private Finance. Thank you.